there will be more improvement than worsening of what we had anticipated.
Okay, the next question comes from Isabella Bufacchi of Il Sole 24 Ore.
Thank you, Princess Lagarde. I have two questions. The first, in a way, is still related to PEP. As you said, the financial markets are more stable. How stable are they? What is your assessment of stability, risk, fragmentation, and spreads at the moment? And my second question is related to the banking system. And you mentioned that TLTRO 3 with a high take-up, but in spite of everything that's been done for the banks and the SSM temporary measures on capital and operational relief and your softer collateral rules, banks see, as you mentioned, a net tightening coming up. And what is the ECB prepared to prevent tightening? And there is no room for tightening because you mentioned that the uncertainty is still high and risks are tilted to the downside. Thank you.
Thank you very much for your questions. On your first question, ever since we've begun implementing PEP back in March, and even more so since June, the euro area financial market sentiment has improved. Although financial conditions remain still lighter than before the outbreak of COVID-19 crisis. Since the announcement itself, the sovereign and corporate bond yield spreads have narrowed, corporate bond issuance has picked up, and equity prices have increased. So overall, you have really a significant improvement. Compared with the time of the PEP announcement, euro investment grade corporate spreads declined by more than 80 basis points, while high yield spreads declined by more than 250 basis points. So we see significant improvement. But having said that, we are not exactly back to where we were before the pandemic started. For example, government bond yields are still higher in most jurisdictions than before the outbreak of the pandemic. And this is highly relevant from a monetary policy stance because sovereign yields are the basis of the pricing of other financial products and loans to businesses and to households. So we are very attentive to those numbers as well. Now, your second question had to do with TLTRO. First of all, I would like to observe that TLTRO has been a great success. And we have had, as you know, an intake of, north of 1.3 trillion euros, which is way above market expectations. And, we asked ourselves, why is it so successful? And clearly, it has to do with the attractive terms under which TLTRO was offered. Second, it was also successful because there was clearly a demand. And third, successful because there was no stigma associated with using the TLTRO. So overall, you had three good reasons for that program to be extremely successful. Now, the second question that we asked ourselves during the Governing Council is, what did we want to do with TLTRO? Well, clearly what we wanted was to encourage banks to continue supporting the economy, to continue extending financing to both firms and households. And what we are seeing in terms of increase of lending to firms and stabilization, slight increase of lending to households is comforting because there is a significant increase. Just to give you an example, in the last 3 months, lending has been in the range of 250 billion euros, which is the largest take-up ever in a period of 3 months. So TLTRO was vastly successful because of the conditions under which it was granted. It seems to have met the purpose that we assigned to it. And, we will determine at the end in September 21, when we actually account for the lending, and we compare that with the benchmark that had been agreed, whether there was, in fact, significant and at least maintained lending to the economy, and the favorable terms and conditions of 50 basis points minus DFR, whether that rate will be available. That's the attractiveness of it. But it was with conditions. Now, do we see a risk of tightening? This is something which is mentioned in the bank lending survey that was just recently published. I think it's fair to say that the banks are anticipating net tightening on the back of what has been a clear loosening of credit terms before that. So I think we have to take that factor into account. Second, we also believe that this anticipation by the banks is clearly related to the maybe the fear of a cliff effect in case the guarantee schemes that have been extended by governments to banks were to arise. And in that vein and on that page, I would like to mention that the Commission, as you know, has recently published some best practices and guidelines to implement those guarantee schemes. From our perspective, we encourage certainly fiscal authorities to look at it and to make sure that they can avoid that cliff effect and they can manage sufficient of a phasing out so that we can avoid the cliff effect that would lead to potential tightening. Thank you.
The next question comes from Marie Charel from Le Monde.
Good afternoon. Thanks for taking my question. What could be the consequences for the European economy and the ECB if the resistance of the Frugal Four weakens the European recovery plan? And do you understand their concerns regarding to the plan and the conditions?
Thank you very much. Our assumption, given what we read, what we know, what we discuss with colleagues in the Commission and other players, our assumption is that the RRF, the Recovery and Resilience Facility, will come about and will be a strong mixture of grants on the one hand, in larger proportion than loans on the other hand. And certainly there is very strong expectations for the purposes that I have indicated before, which have to do with addressing the damage caused to those countries and those sectors that have been massively hurt. And second, moving towards common schemes and European goods that would be the greening and the digitizing of our economies. Clearly everybody has their agenda. And it's hardly surprising that in any of these European important projects, game changers in many ways, that the concerns of each and every member is taken into account, is identified, and that the negotiation process that no doubt will take place will try to address that. But certainly from our perspective, we very much hope that the RRF in the amount of 750 billion euros that comes on the top of the 540 billion euros associated with the 3 programs already decided and approved by the European councils, that will come to support the recovery and to look into the future with a view to greening and digitalizing the European economies.
Okay, the next question comes from Alexander Weber of Bloomberg News.
Good afternoon, President Lagarde. Thanks for taking my question. On the PEP,
Morning.
There have been several different statements from your colleagues on the importance of the capital key in the program.
Yes,
Did you
that's
discuss
Madame
this topic in the
Lagarde.
Governing Council, and if so, what's the view on how far you can deviate from the capital key and how quickly you should converge back to it? And then a second question, if I may, on your strategy review. Has the pandemic changed the scope of the strategy review in any way, in particular your work on measures of inflation and the interpretation of the mandate? And do you think that results in the middle of next year are still feasible? Thank you.
Thank you very much. Concerning PEP, as I mentioned earlier on, one of the key element of PEP is it which differentiates it from other purchase programs. It's flexibility. And frankly, flexibility has served us extremely well.
Tim, she runs the European Central Bank.
Flexibility across time. You can front load, you can slow down, you can reaccelerate. It's flexibility across asset classes. As you know, we've extended the assets that we purchased. And it's flexibility across jurisdictions. And that touches on the capital key that you've just mentioned. So capital keys are the benchmark. But clearly, in the name of flexibility and in order to be effective, efficient, proportional, we can deviate. And there has been deviation, as you have observed from the published numbers that
yes, and
that
then
were
before the
released
IMF,
recently.
she was the finance minister of France.
Countries like
France.
Italy, Germany to a lesser extent, Portugal a little bit, are north of their capital keys. France is below. So deviation is part of the flexibility principle that we apply. And as we said, the capital keys are the benchmarks. Flexibility is the key principle that distinguishes PEP from the others, and we will never,
So anyways, good morning. Good to see you.
let capital keys convergence that will take place at some stage impair the efficiency of the monetary policy that we have to deploy, with the dual function that I have mentioned earlier on. Now, concerning the,
not quite right,
the strategy
but anyways.
review, we had.
Hi, I'm
we
Wayne.
had a
I'm a currency
discussion
trader.
on that.
Welcome to Forex.Today.
Council.
Please thank Traders
And,
Way for sponsoring
it
our
is
community
clear
by
that the
visiting
strategy
tradersway.com.
review has to resume.
Please enjoy the show.
Shortly, and it will be in September that we have our first meetings and review and discussions. Will we finish by mid 2021? I'm not sure. I would probably say second half of 2021, because there's an awful lot of work that needs to be done. And as you have hinted, the pandemic crisis.
I have a pink motorcycle jacket just
and
like her.
The impact that it will have on our economy, on inflation dynamics, and on lots of other matters that will be discussed during the course of the strategy review will have to be taken into account. This is something that we have resolved around the Governing Council table, to take into account the learnings from the pandemic in our strategy review. Another item that we decided as well was to have a whole session that will be dedicated to climate change and a whole session that will be dedicated to financial stability. We had bundled these two in the first place, and both the Vice President and myself are very happy that they form two separate items that will give rise to two sets of publications and measurements of impact and relationship between monetary policy and those two items. Thank you.
Okay, the next question comes from Tom Barfield of AFP, please.
Yeah, hi, Tom Barfield for AFP. Two questions, if I may. The first is, you've talked a bit about cliff edge effects in bank lending, but I was wondering if you're worried about the same thing when it comes to other types of government support programs like income support, Kurzarbeit here in Germany. And the second question is about the European summit this week. What signal will it send if leaders fail to agree on the recovery program this week already?
Thank you, Barry.
I'll start with the second part of your question. And it gives me a chance to actually wish the very, very best of luck, determination, and high spirit of cooperation to colleagues and friends that will meet at the time of the European Council, and to the President of the European Council, President of the European Commission, and obviously the German presidency, I say, you are carrying a lot of hopes and expectations, and we hope that you succeed. You know,
Thank you,
Vice
Daryl.
President and myself have been long veterans of endless European meetings.
I'm glad.
And it's often the case that in Brussels, things take time, and negotiations consume a lot of that time and a lot of energy. My sense is that a very large number of leaders are perfectly aware of the importance of not wasting time, and of being able to signal to the Europeans, signal to the investors, signal to the world that there is a level of consensus and a determination to invest together, to recover together, and to support each other that will be demonstrated by a good agreement, an ambitious agreement that would come about relatively soon. I said to colleagues at the Eurogroup that it had to be fast, flexible, but large as well, and I would certainly stand by those three adjectives. Thank you. Oh. See, I had not really understood, because your sound is not ideal, so I did not understand the first part of your question. Thank you, Michael. So you worried about the cliff effect of some of the
Wait, they're
various
sharing notes. That's cheating.
unemployment schemes that exist around Europe.
Michael.
You know, it is the same concern that I have expressed in relation to the guarantee schemes. And hopefully fiscal authorities, government will take it to heart to phase out gradually as the recovery takes roots, because clearly we are in a timing dilemma where you really want to sustain the economy, support it, and at the same time encourage its pickup. And hopefully the furlough schemes, the unemployment scheme, the part-time schemes that have been put in place will not stop short of the recovery having already taken hold. That would be ideal, yes.
Okay, and the next question comes from Artemis Spiliotti of EFSIN, please.
President Lagarde, good evening from Athens. Thank you for taking my question. First, have you made a first assessment of the effectiveness of the measures that you have taken since the beginning of the pandemic? Is there evidence that the liquidity you provide to euro area banks reach its destination?
Guy, she was
business and,
the finance minister of
the second question is,
France at that
would
point.
your measures have been more effective if they had been backed by bold fiscal policies at the UE level that have not seen, even we seem to be on the verge of new pandemic wave? Thank you.
Well, thank you very much. Yes, we are measuring the effectiveness, the efficiency of our measures on a very regular basis, and we have on the occasion of this Governing Council. And you have to bear in mind that monetary policy measures take always a bit of time to work their way.
Yeah, Tevin, make sure you understand that you might be trading the market, not fundamentals. So right now there's no fundamentals in the market, but there is a market.
Having said that, we are already seeing
It's summer.
signs of the effectiveness.
The primary
because clearly
behavioral effect of summer holidays
is to help
trumps
support the flow of credit to the economy, to
fundamentals, but fundamentals haven't changed. The market has
to
changed.
Businesses, and to help funding those conditions in all parts of the economy. And what we are seeing is that
right, John?
Financial
She's telling you what the value of the euro is going to
from the
be over the next
levels that we
6
had
to 12
seen,
months.
After the, excuse me, after the COVID-19 crisis, and that is thanks in large part to the comprehensive monetary policy measures that we have taken. Now, clearly, we're not back exactly to where we were
I mean, think about it,
before
John.
COVID-19 started.
She
to hit our
is the
radar
primary
screen and
person
affect
that
all of
controls
us
the value
very
of the euro.
severely. But there has been significant improvement.
She and her team manage
if you look at the
the
bank
money
lending
supply
to firms, which is a good
for
indicator,
that currency.
it has increased from March to June, as I said. The corporate take-up of lending was unprecedented, 250 billion euros. We had never seen such a high amount. And this brought the annual growth rates of loans to firms to 7.3% in May, which is up from the cruising level that we observed in February, which was 3%. Now, with regard to lending to families, the monthly change in May returned to the pre-COVID levels after having been much lower for a couple of months. The other characteristics which tells us that our monetary policy is working is that, contrary to what happened in 2008, 2009, banks have taken comfort from the monetary policies that we decided and from the government guarantee schemes that were put in place, not to reflect the shock to the economy in the terms and conditions.
No, this should have an impact today, John.
So there was not the kind of tightening that was observed back in 2008,
I got you, Brad.
2009,
I got
at
you.
the time of the great financial crisis. So, final point, and that's really based on more modeling than empirical data, but our measures are
No, I didn't want to do that. Hang on. Let's go to the other one. This one. Ah, dang it! Did it again. Come on. Okay. All right. Let's take a look at this. Zoom in. Okay. I'll point out the obvious, but there isn't much more to say than the obvious. Okay. Okay, this is a bullish buy zone. That's why it's marked. Remember, we marked this. Watch this. Call that a roll reversal. Okay. But anyways, this is a Sunday afternoon buy. Typically, we target up here, but in the summer, I told you this would probably be a decent target. You should plan big, expect small. Cool. So this is pretty obvious resistance. So the follow-up to that is back down to the support, okay, in which bulls bought again because this area here is also a buy. Okay, these are the two prices in which a bull would buy if it's making higher highs. So it goes back up, in this case, essentially, not exactly, but essentially hit the actual target for the week, and of course more profit taking, and back into the moving averages, and right, and this is acting as a dynamic level of support, and maybe, just maybe, we try again and get back above this ugly resistance, and ugly only if you're a bull. Bears, here's what they did this week. They were interested in selling here, never got an entry. They might be interested in selling up here, never got an entry. The only thing bears can be playing right now is the upside resistance, which is a range trade. And, that worked moderately well. You were profitable for 16 hours here, and you were profitable for 16 hours here. But by and large, on the bigger scope of things, pretty quiet week. Okay? Pretty quiet week. So if you're a bearish trend trader, you were looking to sell here or here on Sunday. You were expecting this as if you were a bearish trend trader. And notice that there was no entry. So now your other thing is a bearish range trader. And maybe you got something in here. Now the interesting thing is you're not expecting much. Okay? You're not expecting much if you're a range trader. Maybe you're expecting there, maybe you're expecting there. I can't really tell you. Okay? But definitely shooting at rabbits. Okay? Definitely shooting at rabbits. Now, again, I tell you, you can choose while we're here, to be an income trader or an asset appreciation trader. Both are just different techniques, different ways to hold the doldrum. So like I said, you should have been here at your chart Sunday afternoon. If you're in the New York time zone, that's when the market opened up and you bought it and you walked away. And you're expecting this, hoping for that. So, yeah. There are other techniques to trade this, of course, but that's the one I prefer. Or you can scalp. Okay, the years that I'm in at Harvard, right? So I'm knee deep in Harvard again. I even got my hat. By the way, I love my hat. Love it. It worked out so good. Check this out. So if you're a Harvard man, you have your hat, and it shows you your class. So if I'm on my yacht and I'm in the Caribbean and I'm wearing my hat, someone will see it and say, oh, he's a Harvard man. Oh, 2020. Now, I love it because it's 2HO. And people are like, wait, is that H2O? And then people will come up and like, hey, man, what does your hat mean? Is it H2O? I'm like, no, that's the year I got my master's degree from Harvard. So it's a great icebreaker because people look at it like, huh? What? But anyway, so in the last 4 years, I've been knee deep in Harvard in the summertime. So I swing and hope. It's not a strategy, but it doesn't hurt. Okay. So I plan big and I expect almost nothing. I plan to swing. But I kind of expect nothing in the summer. If I zero out, I zero out. Totally fine. Okay. Negative 20, not going to happen. Okay. And there's different ways to handle it. Like Mr. High Volt pulled back risk over the summer. He's a really good trader. And his response to the summer is throttle back. Why take the risk? Because there may not be a reward. And if he doesn't perceive reward, why would he take risk? Right? Someone else could day trade this all day, every day, which is great, or session trade it every New York session, every London session, every Asian session, same thing. Now you might be, picking up quarters in front of a freight train, but it's not even a freight train, in front of a steamroller, right? So that's what I'm saying. So the question here is, so if you weren't in school, you would scalp. I certainly could, and I'd have more time. Okay? But one of the things I love doing in summer is I look at it and I say, not today, and I take the rest of the day off. Okay? And think of it this way, if you're primarily a trend trader first and foremost, and then you can drill down all the way into the scalp, think of it that way. You're primarily one thing, but you have the capacity to do another thing, right? I'm super aggressive to trade here, and if I can get the price action I'd expect, then I know on Monday and Tuesday, Wednesdays, there are certain follow-ups to that trend. And then once we get to Thursday or Friday, I probably don't trade this week anymore because I say, well, I was trading the week here. And by Thursday or Friday, I'm kind of like, what's going to happen next week? And I'm really already just planning this move for next week by the time Thursday or Friday comes up. I'm not really looking to day trade. Like, you know, but you can. Okay, so again, I'm not saying you can't. It's your individual strategy and abilities. So, like, I could do this, especially if I get a bounce off of next week's buy zone. Then I'll say, okay, well, I'm kind of front running next week, but I'm kind of not. And I want to stay bullish, but I don't expect much. But I do know this is a next week buy zone, so maybe I buy the dip here. And it depends on where Shanghai opens, or where London opens, or where New York opens, and it depends what's on the calendar. And it's all these things, and your aggression is tempered. Do you ever take trades against my bias? Of course, but it's different. It would be scalping into a swing trade. But in the summer, I don't know about that. Maybe. Probably not, right? Maybe. Okay. So anyways, that's that. That's that. Someone else could look at this, guys, and say, generally, not much has happened. Okay. What's happened? Not a lot. Okay. But you can trade it, and I would rather be a bull than a bear. But you knew that yesterday and the day before 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 and the day before, 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 the day before. You knew what I'm looking for, my expectations for my setups, because I have a very explicit bias. And the bias, as you know, doesn't tell me whether I'm right or wrong. It only helps me set up my trades. Think of it as a scope. Okay, you're a sniper. You're a hell of a shot. You have lots of training. The scope doesn't pull the trigger for you. Okay? My bias is my scope. It helps me make my adjustments and it helps me target. Okay? So if I'm going to buy this again, this seems like a pretty reasonable price. Okay? Because statistical analysis of this data set says, yeah, this is all right. Okay? That's all. And how would I feel if I was a bear or a bull and today ended up like this? Well, then maybe tomorrow I buy here. And then what if tomorrow's like this? Then I'll probably take a break. I'll probably just stop looking for a trade until I get a higher high, higher low. And then I'm like, okay, I'll try again. Okay. Now, that's how I handle summer. When we have better volume and volatility, I'm aggressive. Okay? I might want to get 20 trades in a day. And 8 of them are the same trade. Just click, up, 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 down, down. Click, up, 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 down, down. Click, up, 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 down, down. Click. 1 minute, 5 minute, 15 minute. All of them, none of them. Okay. The thing is, my scope helps me, but it doesn't pull the trigger for me. Okay. So we drew this now last month. Let's see if it's helpful. What do you think? By the way, let's take this further. One of the plans is plan big, which means if you're a bear, you're still an M3 trader, right? Expect small. Okay, so if you plan big and expect small and you're a bear, what do I mean by expect small? What's the target? Okay? What's the target? I'm planning big and expecting small, and I'm a bull. Thank you. Ernest nailed it. S1. So I'd like it to go to M3, but I wouldn't be surprised if S1 ends up being our bottom. Okay? Just putting all this into context. Okay? And there's your S1. Cool. There's your M3. There's your S1. Cool. Right on. Okay? There's bearishness here. Up, right? Down, 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 down. Up, up. Sell. Down, 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 down. Lower, low. Up, up. Lower, high. Off the central pivot. Down, down. Double bottom. We're stuck. Okay? Now, put this in bigger context. Bulls are taking this north. You're like, Wayne, how do you know that, eh? And I say, oh, for sure. If you just look at our trade plan from last month, double bottom, higher high, higher low, and pound yen says we're going to finish the summer up on high. Now, it might take us 6, 7, 8 weeks to get up there, but bulls, okay, are going to play this out. Maybe more like this. Okay? But that's the plan, Stan. That's the plan. Yeah. So, buying there and what? Putting a stop there? Or smaller? Or the way I prefer, because when I say we have these setups, I don't mean drop a 200 pip stop and pray to God it goes up. Someone in the comments said that. Oh, I can't swing trade because I can't bear being down hundreds of pips before it goes up. When the hell did I say that? Not once in a 20-year career. So I'm like, wow. Haters gotta hate, 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 but come on. Anyways, so what you do is you find your entry and then day trade your way up by managing your risk, right? Yeah, it's true though. It's amazing though. People develop their own agendas or filter things themselves, or I don't know what's going on, but yeah, so funny. I just can't trade Wayne's swing trading. I like his pivots, but I just can't be down hundreds of pips before. Like, oh, what? What? So anyways, so let's dive into that. So let's say you're a buyer down here because it was our trade plan last month. It's just technical analysis. Okay? Okay, so let's say you bought there. What should you do now? How do you manage this? Should you have a 300 pip stop loss? No, how about you day trade it now? You day trade your swing trades. But that's what swing trading is. So, here's your day trading, right? Double bottom, okay? Okay, now you got your support lines. Cool, you had another little up. And what you need to be doing now is basically this on the smaller time frames. Okay? If it makes a lower low, you back out. Okay? And if it retests 134, well, you know what? If it triple bottoms inverse head and shoulders, right? If you get an inverse head and shoulders on top of your support line, yeah, maybe you try again, take the shot. Okay? The issue here is you have a fundamental bias. Okay? And you have technical analysis. Now, again, this is our buy zone we put out here, oh, I don't know, 3-4 weeks ago. Okay? You understand, like, how important this line was? This was our plan from 3 or 4 or 5 weeks ago. So when you're a bull and it comes down, hits your plan, your planned entry, your planned price. Your plan was if it retraces back to 134, look to get long. Well, how about back to 134, inverse head and shoulders, gone, right? Maybe this is what you're doing. That's a reversal pattern on the exact price you wanted. But this is the thing, like, you can day trade this, and now you're on this on a 15-minute chart even, okay? And you're going to nurse this trade, and it's going to go up for a couple hours, and it's going to come down for 3 or 4 or 5 or 6 hours. Then it's going to go up for 16 hours, and it's going to come back for 12 hours, and we're just going to do what we do, okay? And you can certainly nurse that now. And what I mean by nurse is move your stop to at least break even over the course of time. So let's say your stop right now, or your entry was more like 134.34. Okay, so right now your stop is what? Here? 50 pips, not 300, you understand? And if it comes back down, you'll have to decide. Because I want my stop below here, because even if it comes down, there's a pretty good probability it goes back up again. That's why it's called support. And if it makes a lower low, yeah, I probably want to bail on the idea. Probably want to take a walk. You're like, oh man, that could have worked, should have worked. I really like that inverse head and shoulders, but it failed, so I bailed. Okay. So right now, let's go back to this. Your entry is like in here. You're a little late. It's okay. And your stop is down here. So you got 50 pips rocking on this. And what I mean now by day trading it is what you're trying to do is allow it to do this. And then maybe tomorrow it's going to come back down and knock you up. Okay? Yeah, too bad. Maybe if you get up here and you don't like it, you move your stop. Okay? You could do it that way. The thing is you're going to get a lot of break-evens. Remember, why did you buy this? I think if you bought this, your intention was to make money. Am I right? You looked at the risk, you looked at the reward, and you're like, I want to make money on this. So I think if you watch this and it heads up, hits resistance and starts failing, and you're like, well, I'm going to move my stop. Well, that's not what your intent was. If you're day trading this, if you're nursing this, as I say, and you have a half decent entry and you're in at support, but it gets to the next level of resistance, and now you're on a 15-minute chart and it's Shanghai Open or London Open and you see bearishness, why don't you just take profit? Just say, give me the income. Give me the income. Give it to me. Out. Okay? If it does this, stay in. Okay? But if you're late and you come down here and you're back at break even, what do you do now? Bail on it? Why? Your plan was to make money. Your plan wasn't to break even. Okay? You should have taken profit up here. So you wouldn't break even here. You still have a valid trade, so to speak. So you would have to make a choice. You could say, well, I'll break even here, but I'm going to try to get back in here. Hey, Trader's Way will love it. They'll earn another commission, right? But you need to decide what your conviction level was when you set up this trade plan. You see what I mean? What was your plan? Okay? And very often, if it was worth buying it here, it's still worth buying it again. So do you want to exit here and then try to enter back in again? Yeah, you can. Or you just let it run and all that kind of stuff. So lots of choices to be made. But the thing is, and this is my opinion, my look at the world. If you didn't know this was a buy zone, therein lies your problem. So what you do after that, irrelevant. I mean, honestly, if you didn't see that coming and you're a bull, your problem isn't risk management. Your problem isn't day trading versus intraday trading or scalping. you're missing the big picture. This is a double bottom, okay, and a move based on a fundamental recovery from a global economic shutdown. I mean, you're in on that, or you're not on the clue train. Or you're the opposite, and you're like, Wayne, you know, half the United States is shutting down again. Hong Kong is shutting down again. New Zealand is shutting down again. Australia is shutting down again. Europe never really opened. You know, there's going to be another dip before we get the true rally. Cool, right on. But you have to express that. It has to be a solid representation of your trading methodology, your trading bias, your trading strategy, right? You have to be hardcore COVID-20 on this one, right? COVID 2.0. Or you're hardcore on the global recovery. Yes, there's going to be dips, okay? But long term, right? And I mean factual. I laughed. My phone goes pa-ching yesterday. Oh, there's going to be a vaccine for COVID. And I'm like, oh, well, the stock market's going to go ape shit, right? Watch Carnival Cruises. Of course, it took off. But I'm like, but that's a rumor. I don't trade rumors. I don't trade speculation. I don't trade news. I trade fundamentals. So I'm like, yeah, nothing's going to happen in the Forex market because the Forex market is smart. Way smarter than the stock market. And sure enough, you know, nothing happened. But what you should be looking at is, what is your plan? And are you ready, willing, and able? So once again, we've gone through over the last 6 weeks to the point where people are like, these webinars suck because all he does is talk about fundamentals and trader psychology and how professionals trade. Like, that's all I'm talking about. Okay, yeah. But, okay, the way I'm looking at the market is these are very obvious setups. You don't need me to tell you that this is support because I've already told you it was support. These are very clear entries and exits and stuff. But by and large, why I've been so fundamentals, the reason I've been so trader psychology is these are not great trading conditions, but you can trade. But right? But if you're going to scalp it or spot trade it or do whatever you want to do, these are very obvious levels, right? So, yeah. To me, it's like a big question mark. Like, what did you want me to do? You want me to tell you that was support, right? Look at Sunday afternoon. You should have bought it there. Done. Your whole week is over right there. This is me. The whole speech, as this is falling, the whole speech was, you should be ready, willing, and able at 6 p.m. on Sunday to buy this if you're a bull. And if you don't, it's because you failed because you didn't do the work. Do you guys remember that speech? It was brutal. It was the bitch slap speech of the month. I even apologized. I said, this is like your wake-up call. Right? You guys remember that speech? And I said, the sad thing is, you're smart enough, you're capable enough, you know what you want, but most people just don't do it. You remember that? I'm like, I know you can do it, you know you can do it, the problem is you don't do it. Why? You should think about it. I said, you should ask your tough questions, right? Why is it that you don't? You have the crystal ball. It says, oh, you buy that on Sunday. And you're like, yeah, no. So, I don't, what more am I supposed to do anyways, right? So, do you want this to go up or not? It's a very clear role reversal. If that's what you want, you should be looking to buy. using technical analysis on this chart. Do you want to buy it high or do you want to buy it low? Well, let's see what most people have done if they were bulls. Every time it hits 79,000, a bull buys. You don't need me to tell you to do that, do you? I don't think so. Now, I also look at this and go, yeah, this is pretty mediocre. I'm like, yeah, this is pretty mediocre. So here's how I like to handle this. Okay, again, there are multiple ways of handling this. You could definitely be day trading this. I love day trading. I love scalping. I like spot trading. All of this exists. But what have I been trying to tell you? Which one did I just click? It was CAD, right? What did I just tell you? What I like to do is buy it here and I'm done for the week. Literally an 8-minute week. And I'm like, yeah, it's summer. So I don't expect much. So I'll leave my stop there and I'm done. Okay? Now, then you get the up, 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 down, down. Up, 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 down, down. So if you're a bull, what do you do next? What do you do? Tell me what to do. Give me the signal. Make it happen. Come on, make it rain pips. Come on now. But the thing is, you're already 20 pips late. What the heck? And you're about 24 hours late. That's the problem. So you log in, you're like, where's the trade? Where's the trade? Where's the trade? Where's the trade? Okay, where's the trade, guys? Well, first of all, it was probably yesterday. Where's the trade? Where's the trade? Where's the trade? Give me the juice. I gotta move. I gotta trade. Give me the juice. Come on. Give me the juice. How do I make money? Dude, you should have bought it like 4 days ago when you were supposed to be at your charts. Or you can be doing this. You can be doing this. This is cool. Okay, so now you're trying to play a role reversal, but it's a tough one. There's a fight going on here. So you have to decide, are you buying the higher high as a dip? Okay, remember these moving averages are dead because there's no market. But are you trading the breakout? Why didn't you buy it at support? These are the big questions, right? But anyways, are you on this? A stock market will go up, guys. But let me tell you, it's going to be a tough February and March. See, I have my crystal ball. And I do my best to honor it. Okay? Okay. So let's look at before this period. Okay. Boo-da-boo-boo. So according to my charts, Friday of last week, if you're a bull, and by the way, we got to continue with this. We got to continue with this theme. There's the bearish entry, by definition, M3. Okay, plan big, expect small. Check it out. Look at the exit last week for bears. S1. Plan big, expect small. Now it's the bulls' turn. Bulls are like, the distance between here and here is my buy zone. So I'm going to be at my chart Sunday at 6 p.m. And holy shit! Double bottom, higher low, 1, 2, 3, long and strong. Done for the week. Done. Stops here. Okay. Now, if this makes a higher high, you are allowed to move your stop to break even. Okay. But not until we have a higher high. Lukeman says sell now. Well, let's do that. Let's take a look at that. First of all your yen pairs need to fall. So you got to be careful on the correlation. On this, the major resistance is up here at 79.5. So why do you say sell now? I guess you're playing this in of itself. I mean, I think you're doing this because we're so range bound. I mean, I can't say you're wrong, of course, but I would think this goes up 30 more pips before you hit the sell zone. Okay, Luckman. Okay. So, looking at it on this 1 hour chart, is this range bound, trending up or trending down? Don't give me your opinion. Look at the chart based on what you see only. Is it an uptrend, a downtrend, or a sideways trend? Okay, mostly range. Cool. So that's easy. You buy at the bottom of the range, or you sell at the top of the range, or you do both if you want to. Now let's take it further. You buy at the bottom of the range, but you also like to buy which pivot point? Half position. Come on, KG. Where do you buy? Come on. If you're a bull, what do you buy? What is the best pivot in the world? Okay, elementary questions, guys. Maybe I didn't ask it right, but pretty elementary. So let's go back a couple of weeks. Oh, so you buy here on Sunday? Oh, that's neat. What about the next week? So you buy here on Sunday? Oh, well, that's a neat trick. Okay. Now what? The next week after that, do you buy here on Sunday? No, there's no trade. Huh. Well, that's very convenient. So what about down here? Do you buy there on Sunday? Yeah. Look, I just planned out 3 weeks. You're at support, you're at M2, and you're a bull. Nice. Easy. Every single time. Bears are looking for an opportunity to sell. Well, here's one at the top. So I can't quite see what's going on there. Okay, I think there was a higher one earlier. Cool. So Sunday here, do bears sell at M2? No. Maybe here, but yes, here. Okay, market opens on Sunday. Do bears sell here? No. Maybe here. Maybe here. Okay. This is also the take profit zone in bulls, so there's also one there. Okay. Market opens at M3 on Sunday. Do you sell there? Yeah. Because you know bulls aren't going to buy it. If bulls bought it, it'd have to be a lot lower. It'd have to be down here, but you already knew that. Okay. Here's a second chance. Cool, right on. You're still selling at resistance, still M3. What about here on Monday or Sunday afternoon? Market opened. Do you sell? No. Do you sell? No. Do you sell? No. Do you sell? Yeah, right here. Yeah. Yeah, that's it. That is the, yeah. 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 Oh, yeah. Yeah. Oh, for sure, eh? You notice how it's just like simple plans? You're a bull. You're like, oh, Sunday, M2, done. You're done in 8 minutes. Look at the target, too. Plan big, expect small. Plan big, expect small. Oh, but we actually hit our target. And then you look at it here and you're like, you're a bull. Do you buy that? No. Take the rest of the week off. Your next opportunity wouldn't be until a pull back to the central pivot. Okay? Cool. What you got? Cool. Right on. What about this week? Yeah, you bought it here. You're done. So you can day trade this for sure. You can scalp this for sure. You can do market session trading for sure. But do you see also I'm trying to show you that if you're a swing trader, there you can also trade this. Right? Hey, if you're in a range inside of a range, don't trade it. So anyways, I'm trying to show you there's multiple ways of doing this. Okay? Multiple ways. And I'm showing you my favorite, but I'm also showing you like this was probably a beautiful London Open trade. This was probably a beautiful London Open trade. Okay? This is a beautiful Asia Open. This is a beautiful London Open. There are lots of opportunities, right? This is a New York. This is a London. This is great. This is the close. It closed on support. None of this is surprising or exciting. Look, the market closed on support. Yeah, where else would it close? Okay. Okay. Ace. All of them. Cool. Cool. So, Ace, are you trying to knock me down? What's the point of the question? Oh, they're all legit, Wayne, but, okay. Okay, cool. Just saying. It's not about me, okay? It's not about me, brother. But I hope you're taking in the information, okay? I want you to be able to trade like this, and I want us to work together, and I want to raise a whole bunch of money for you or with you, and then you actually do this, okay? Think of it. I've been doing this long enough where I'd rather have you do all the work and I make a big chunk of money. I want you to make me filthy stinking rich so that I don't have to work. So for me to get you to in that kind of position, I have to tell you everything I know and give you the strength and confidence you need to actually do it. And I'll help you be very, very, very successful. And I'm also going to get money off of that. That's fair, right? We can start a hedge fund together. You can work and trade and trade and trade, and money's going to fall out of the sky, and all your dreams are going to come true, and you're going to pay me for it. Oh, that's what a hedge fund is. Right? Like, oh, great. Cool. Right? I'll be Axelrod, and you be Dollar Bill. You can live in a big mansion. You can drive a Ferrari. Actually, Dollar Bill has like a minivan or something, right? But anyways, you remember that, like when Axel fired in season 1, he fired one of his traders. And so the psychologist had to go over the house and make sure he wasn't going to be vindictive. And you get there, and it's a mansion. He's got Ferraris everywhere. And he's just a trader. Trading Axe Capital's stack. Cool. Let's make that happen. You can have the big house and the Ferrari. Okay, but the problem is I need people that actually do it. When I give you a 45-minute speech that you're smart enough, you're good enough, you're capable, that success is going to be inconvenient, and that the thing that holds most people back is they're not ready, willing, and able to actually do the work. They're not able to handle the sacrifice, like read a 7-paragraph report by the Australian Bank. 7 paragraphs, I can't read that, Wayne. Or be at your chart, ready, willing, and able, Sunday afternoon to pull the trigger. And then I just show you, like, for 5 weeks in a row, there's a trade. And you're like, Wayne, I can't be at the charts there. It's too inconvenient. That's what I'm talking about. That's what I'm talking about. Okay? That's what I'm talking about. If I just go through these and I'm like, look, Sunday afternoon there was a trade. And the Sunday afternoon before that there was a trade. And the Sunday before that there was a trade. And there was Sunday before that there was a trade. And the Sunday before that there was a trade. Guess what's going to happen this Sunday? So that's all. I'm pushing you guys to show you you have the capacity to succeed, and it's there. You just, right? You have to be ready, willing, and able to do the work. And the weird thing is, if I talk to 1 million people, I'll find one person that can actually do it. Okay? But if you can do it, imagine now I could show a group of people with money and I say, look, I have 25 people stationed all around the world watching the markets 24 hours a day, and this is what we've produced over the last 3 years. And I show them our track record as a team. And I can say, I can reconfigure all their trading in all different kinds of ways and show you as a team how freaking amazing we are. And you can go and invest into you can invest $25 million into a real estate deal, lock yourself up in more illiquid assets. Yeah, sure, you'll get a net operating income of 15% minus your 6% cost. So you're going to pull down the 9, which is pretty good when your risk-free rate of return is less than 2%. So yeah, that looks really good. But the thing is, it's a long-term play. And your real rewards are going to be selling it, but that won't happen for 10 years. You're going to have to refinance it. So at the end of the day, what if we could do that for you every 3 months instead of every 12 months? Boom, we got money. How would you like to stay liquid and get 15%? Let's say twice a year instead of once a year. See how easy of a pitch that is? How would you like your 15% return on capital every 6 months instead of every 12 months? They're like, you can do that? Yeah, and you'll be completely liquid. What? Yeah, let me show you my track record. Here's my team, 25 people stationed all around the world, working 24 hours a day, eyes always on the prize. Done. Good. So, I need you to do the job. So when we go through these yen pairs, right? And I'm like, look, these are bigger trades with less work. Bigger trades with less work. Cool. Here's your Friday front run. Okay. Here's your Sunday entry. You see that? There's your Friday front run, if you're into it. Or there's your Sunday. Look, in the first 8 minutes of trading, you were done for the entire week. Now this one's really good because you kicked off the central pivot. The actual target is R2 if you're getting a normal market. So this is unusually good. This is unusually good. So you see, you could have bought it on Friday. You could have bought it on Sunday. Either way, I'm happy with you. Thank you. You either got the M2 or you got the central. Great. And by Wednesday, you hit the R2. You took profit. You're done for the week. Easy 100 pips. Drop the mic. Take the rest of the week off. Thank you very much. That was a hell of an 8 minutes. Good job. Awesome. Good job. Congratulations. Awesome. Okay. What about the next day? This is probably a London Open. Either way, then you hit your target and you're out. Right? So whether you're swing trading this or day trading this or intraday trading this or scalping this, I look at this and say that the most important thing here is that you knew this was going down and this was going up. Okay? That's all you had to decide. And of course, you know my opinion, right? You know my opinion is up on this. You knew it today and yesterday and the day before and the day before and the day before and the day before and the day before. You knew that. You knew that the whole time. I just want to be a bull, right? Factual. M2, I want this to go up. 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 Guess what I'm going to want next week? Okay. Prince is like, I'm getting there. It's not easy. Of course it's not easy. Right? That's why it pays too much money. Okay. 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 So I think if you filter things out with a bias, and you know this is, you're going to buy this or you're not going to buy this. Now things like your day trading plan or your scalping plan or your intraday, right? Your market open plan. Is it helpful to know that in here you want to buy and only buy? Okay. Is it helpful that you know this means to take profit? Is it helpful to know that this means to take profit? Okay. Is it helpful to know that that's where you want to buy? Okay. Higher high, higher low. Like, isn't it nice to know that you want to buy somewhere in there? Then you say, well, Wayne, that's happening around a London Open. Yeah. 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 And why do I know this is going up? Or why do I believe it's going to go up? What is my belief based on? Even if I'm wrong, what is my belief based on? Reb says you should get up for the London Open. You don't have to, but you can. If you're going to trade the London Open, for sure. Stimulus package, no. Fundamentals, that's very generic. USD policy, it's too generic. The Fed is not going to cut interest rates anymore. You can go all the way back down to one day and one speech by Jay Powell. Okay? One sentence on one particular day said by one central banker. So going back to the person that said, why are we watching Christine Lagarde? This is so boring. This is not interesting at all. Why can't we do some trading? Well, that's why. Because one thing was said on one day and my fundamental bias flipped 180 degrees. And as far as I'm concerned, probably for the next 5 to 10 years. Now, that may change, but I don't expect it to change. But if it does change, I will tell you. But the thing is, with that, I have a bias, a lens. I filter everything else. And then I add things like technical analysis. So I look at this, and this is easy. You know the rules of engagement. It's not difficult. Now, the difficult part is it does this. And then it does this. And now it's going to do this. How many people are getting lost or losing their profits in here? Because you're like, man, nothing happened all day, all week. And then, man, nothing happened all week. And then, man, nothing happened all week. And then you're like, well, we actually went from 112 to 114.5. So you should be up 250 pips per trade, but you might be on 45 trades. I don't know. You can be as on many trades as you want. You're like, yeah, nothing happened except it went up 250 pips. So you're stuck inside your 15-minute chart and you can't see. You're developing tactics with no strategy. And guess what? That does not win a war. Okay? Tactics alone do not win a war. However, right, to carry out strategy, you have to have good tactics. You have to have good techniques. Okay? If you always fire your weapon high and to the left, you're going to be very ineffective, no matter what your strategy is. If you always hit your golf ball high and to the right, even though you watch Golf Channel every week religiously, and you can you can heckle Rory and Tiger and Phil. And you're like, oh man, I can't believe he hit a shot like that, man. Oh, he's losing it. He sucks. Yeah, no matter if you have a very strong fundamental understanding of the game of golf and you're very strategic, if you get out on the golf course and you're always tactically high and to the right, you're not going to have good scores, right? But the golfers with good techniques, they also have better strategies. You'll see. The ones that win anyways. We'll find out, Michael. Okay. Oh, is that right, Daniel? That one I missed. Tactics without strategies, noise before the defeat. Yeah, interesting. So anyways, I know you can do this. Okay. And so, for those who are like, he never puts me into trades. Why doesn't he just give me a signal? Do you understand? I probably just gave you about 20 setups today. Do you understand that? Okay. No, I'm not doing KiwiCAD, sorry. So that's the thing. You should have enough knowledge from what I just gave you that there must be at least 20 trades that you just got out of this conversation. Did I say something like, I think you should sell USD CAD at 136.22 and you should, no. Okay. No, I did not. Okay. But last week I said this should go up for a while and then try to come back down. Okay. So what does that mean to you? We might have done this in a live trading group. Okay. So here it is on Thursday. I'm like, okay, great. It's made a lower low. So I expect it to make a lower high and then make a new lower low. Okay. Cool. So if you were into that, you're like, okay, I like that idea. I like it. Tell me the pivot point in which you would want to sell. If you were expecting the lower low to create a lower high. Sorry, lower high. Sorry, I got this backwards. If you expect a lower low to then make a lower high and then produce a new lower low, tell me the pivot point in which you would expect to be selling. Okay. Oh, you mean here? Cool. So now we're trying to make the lower low and head down here. Cool. Now you'll notice my target is here because the pivot's tightened, because after the lower low it did go up, but it went up so much that it pulled the pivots in. And this used to be down here. So, okay. So we'll see if that happens. But look at the role reversal we're on now. Lower low, look left, drag it right, boom. Okay. But you might be missing these. You might be missing these. Let me also point something out. We used to be way up here, and now we're way down here. So there's your lower high. What do I lower low? Sorry. Okay. What do I expect after a lower low if I'm a bear? And you know I'm a bear because I'm a bear on the USD. So you know it. It's the same as being long euro dollar. What do I expect after a lower low if I'm a bear? Why am I drawing upward channels like this? What in the heck am I doing? What do I expect when I draw all of this out for you? What is the knowledge that I'm sharing with you? What is my intent, guys? A lower high. Cool. Now, using monthly pivot points, because these are long-term trades, what monthly pivot point would I want to sell if I'm expecting a lower high, right? Because of this lower low and because I'm a bear. Fundamentally, I'm a bear. So technically, what am I expecting if I want a lower high? You tell me. Give me the signal. Wow, you guys are all over the place. You have, yeah, KG, you're, no. This is elementary, guys. If I'm a bear and I'm expecting a lower high to sell, it's an M3. You have to know this. Like, oh my God, if you answered anything but M3, you need to read the book, take the training courses. You need to do something radical. R1 is wrong. Whoever taught you R1 doesn't know a thing about trading pivot points. Okay? That's what they've been taught by someone else that doesn't know how to do pivot points. Okay? M3 100% of the time. Oh, look, there's the M3. Okay? High, lower low, lower high. That's how a bear would do it every single time. Every single time. And by me doing this, I'm showing you. Look what I actually did 3 weeks ago, guys. It was down. Then it was up. That's great. Then it hit there. Now it's going down again. Right? I'm doing everything but shoving the silver spoon into your mouth. Okay? So whoever said R1, wrong. It's wrong. By the way, check this out. Weekly M3, monthly M3. Market knows what it's doing. Here's what happened in the last 12 weeks. If you have this in your mind, your day trading will improve, because then you can start looking at trend to identify support and resistance, and now your day trading will improve because it's based on, first and foremost, larger fundamental trends and larger technical analysis. And now on smaller time frames, you're doing lower low, lower high, right? Down, 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 up, up, down, 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 up, up, down, 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 down. Now in the summer, it's slower than you would like, and I've prepared you for that too. Okay? So now you're hoping that this is a breakout, pullback, and that's next week. See? Even next week's done. Done, print, fade to black. Okay? But if anyone else said something different than M3, you're wrong, and this is going to cost you your future. It's costing you a lot of money that you don't know these basics. I'm not talking about deep, complicated levels of technical analysis. You need to know this like you know the ABCs. Okay? 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 If you don't know that, then you need to learn. I mean, do whatever it takes. Get radical into it. Okay? Get radical into it. Okay? Yeah. So I'm just saying, now that you know that you don't know, you need to do whatever it takes to be in the know. Right? You need to know this. You have to know this. Okay? And then I'm going to end with a different note here. Okay. There are two things you need to know to be a success in Forex. Success in FX. Okay? One, price action. And two, pivot points. Okay? And the interesting thing is they're pretty much the same. It's why they work well. Okay? One is based on price. The other is based on market. And both, you ready for this? Both, let's do it this way. Both, let's do it this way. Both are the same thing. They are both a different form of the same thing. Support and resistance. So all your indicators that tell you that you're overbought and oversold, like oscillators, are irrelevant without support and resistance. Your chart patterns, like head and shoulders patterns or inverse head and shoulders patterns or whatever, they're all useless without support and resistance. Fibonacci is an illusion. There's nothing interesting about Fibonacci. I use it all the time, but like Elliott Wave, for some reason humans love to worship. And so they're like, Elliott Wave is such a genius, or Fibonacci was such a genius. I'll show you Fibonacci. If I change everything now and say, I'm going to buy 25, 50, and 75%. I can do this the rest of my career and do just as well. That there is nothing interesting about 3A2 or 618. Oh, it's the way that tortoise shells grow. It's the way that a sea star grows. It's the way that a tulip blooms, or it's the way that oh my God, seriously? Does anybody actually believe all that crap? Really? Oh my God. Oh my God, really? Okay? But look, they're helpful tools. But if you don't know where this is going, you won't know which way to draw your fibs. If you're counting waves and you're like, well, because this is a 5 wave, then the market has to, what the heck, really? Now that's helpful depending on your psychology, the type of human you are. If you're an accountant, then you're going to love Elliott Wave. You should learn it. It's very organized. There's very specific rules and all that kind of stuff. You'll like it. I'm not that type of person. I hire, right? Right? I hire accountants. I wouldn't make a good accountant. Okay? But all you need to know is support and resistance. Why do you need support and resistance? Why is this important? Because superseding all of your technical analysis is your idea. That's it. Your idea is it's going up or it's going down. That's it. I don't even care how you come to that conclusion. But you should not do it for a pair. You should do it for a currency. The dollar over the next year will go up or down. Which one? I don't even care how you do it. The pound for the next year will go up or go down. The euro, for whatever reason, will go up and down. Because as I showed you, on euro dollar, I just showed you, so you have to use your mind's eye. But I just showed you, on euro dollar, over the last 5 weeks, you had very, very clear sells. At very clear prices. And even though it went up more than it went down, as a seller of the euro dollar, you were right for like 16 to 24 hour periods you were making money. Oh, well, if you're a day trader, that's fantastic. But if you were a buyer, you were generally correct over the course of, let's say 4 days, 4 to 8 days. So if you're a swing trader, you made money. So if you were one or the other, if you were a bull or you were a bear, you would have made money. Yeah, but the stops are all part of this, guys. The stops are just below support, or the stops are just above resistance. Remember, everyone else is doing, right? Everyone else is doing what they're doing, and they're all doing the same thing, but from different points of view. There is no right or wrong in Forex. It's whether you execute or you don't execute. There is no right or wrong in Forex. It's just whether you execute. If you can execute, you will make money. It doesn't even matter whether you're a bull or a bear. There is no right or wrong. But you're either hardcore disciplined and strong, or you're going to end up broke. I'm giving you reality, unfortunately without the dream. The yellow Lamborghini idea sells a lot better. The get rich quick on YouTube sells wonderful, right? What an awesome pitch. I'm giving you something worth significantly more than you should buy the euro dollar yesterday. Oh my God. I'm teaching you how to take care of your life, your friends, your family, your loved ones. Put your children in a safer neighborhood or give them a better future. Okay? Whatever. You're getting so much more. And if today's conversation doesn't put you into 20 different trades over the next few days, then you are not listening. Okay? But if you can be a success doing this, my goal for the next 25 years is to take care of you. Take you and push, pull, bribe, and threat your way to another level. Okay? That's what we're going to do the next 25 years. Okay? yeah, I'll see you guys tonight if you're in my live group. For those that didn't answer the technical analysis questions properly, the link below to FX Bootcamp is there. On the payment page, there's a coupon code that saves you 77% or something. 77% discount. Take the course while it's 77% off. Take it. Put the money in. Let's just move on. Because I'm telling you, summer's going to be over, and if you still don't know what to do, it's going to be difficult. I mean, that's not going to be difficult. It's just it's just faster. Just jump ahead. Skip a year ahead. Take the course. Yeah, it's 382. Take the course. Okay? That's it. Take the course. You have to know. Take the course. Click the button. Take the course. Right? $78.6. Cool. So anyways, so if you're in my live trading group, I will see you tonight. Looking forward to it. What's the price? $382. Take the course. I'd like to thank Traders Wave for making these webinars and live streams possible. Look, here's the thing. They're a broker. You're a currency trader. They're a currency broker. They want an opportunity to earn your loyalty and respect. That's a noble thing. Please show them some love. Give them that opportunity, okay? Tradersway.com. Open up a demo account. Takes you 20 seconds. Just that act in itself, I think will bring you good karma. Okay? Wow, you get a tax return? How awesome's that? Wow, tax return, huh? Yeah, good, good. Yeah, it's funny. I pay taxes. I don't get tax returns. I pay taxes. Anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. I will see you tomorrow. Yeah, thank you, Traders Way. Thank you for your effort.